As protests continue across the United States, we believe it is important for us to speak up. ARK, our company, and every team member stands in solidarity with the Black community in their fight against systemic racism and oppression. We ask our listeners to join us in speaking up against racial discrimination, and please consider donating to an organization fighting for the equal treatment of fellow human beings.
Hi, everyone, again. This is Cathie Wood, CEO and CIO of ARK Invest. Well, certainly never a dull moment. And of course, the events of the last 10 days, almost 2 weeks, have been heartbreaking. If you go to About ARK on our website at ark-invest.com, you can see our team, and you can see the diversity of our team, and you can see how we are all feeling a little bit down, or we definitely have been feeling a bit down. When that happens in an organization like ours, we want to lift each other up. And so what we have done in the last week is we've educated ourselves more, and our employees have selected some organizations to which we are going to contribute individually, and ARK is going to match. So if you'd like to learn more about those organizations, you can go to our site About ARK. We've certainly seen the tragedy of the last 10 days to 2 weeks, and I think the first assumption was, okay, now this is going to extend a recession. This is going to be terrible. And while it is terrible on one level, on another level, it is not going to extend the recession. Now, I am speaking only in GDP terms here, and what reports we're going to see during the next few quarters. I think the analogy here is it's a little bit like wartime. And in wartime, there is, of course, destruction, but then quickly the rebuilding effort takes place. And what happens then is GDP increases. And we know that the rebuilding phase is going to take place. Everyone wants it to get back on track. And so this is actually going to be a boost to GDP. Certainly hasn't been a boost to our morale, but it will be a boost to GDP. So again, the wartime analogy, wartime tends to be a stimulant to GDP. And as you know, when we've been thinking about the coronavirus, we've been using an analogy, the shock to the system, with October of '87 and 9/11 being the two comparisons that made sense, certainly to me, having been through them both while being in the market. And today's employment report corroborates that. I think everyone was pretty shocked this morning to see non-farm payroll employment up for the month of May. Now, just to give you a sense of the drama, last month, so April, employment dropped 20.7 million, by 20.7 million people. And then the expectation was May would be another serious decline, perhaps not as serious. So the consensus expectation was 7.5 million jobs lost in the month of May. Instead, what happened is the economy created 2.5 million jobs. So the consensus estimate was off by roughly 10 million jobs. That's how quickly this economy is turning around, and it makes sense. We know that the coasts were harder hit, and we know that other states were basically saying, come here, we're open to do business, certainly in the month of May. And some of that may have happened. The unemployment rate, which last month was 14.7%, and which most economists expected to go to 20%. In fact, the estimate for May was 19%. Instead of going up, it dropped from 14.7% to 13.3%. Nothing to brag about, but the trajectory is in the right direction now. And the hours worked numbers were phenomenal. The average weekly hours worked increased in just 1 month by, it was, well, in the manufacturing sector, 2.1%. That's the manufacturing hours worked. And the average weekly hours worked for the entire economy went up 1%. Many people don't know this, but that number actually moves the needle more often than the employment numbers themselves. That work week is a very powerful number. And I've rarely seen it go up by 1% over 1 month. That's annualizing at a roughly 12% rate. So this was a pretty surprising report. The average hourly earnings, I know, were up. Actually, they declined. They declined, and it's a mix shift. So this is the opposite of what happened during the crisis. So those jobs lost tended to be the lower wage jobs. So last month, the average hourly earnings, month to month again, were up 4.7%. A clue that that a lot of us were working from our homes. This month, for the month of May, the average hourly earnings dropped 1%. Year over year, they're up 6.7% still, which is roughly double where we were before the coronavirus. And the average weekly earnings were up on a year over year basis, 7.7%. So last week we talked about the saving rate up at 33% for April. That was pretty shocking. I still think it could go up again slightly for the month of May. But if it doesn't, it's because the economy really is kicking in a big way, and we're on our way. What I'd like to talk about now is what we're seeing in the markets from a signaling point of view. And this is partly because fiscal and monetary policy are highly stimulative. And today we just saw that President Trump reiterated his desire to cut payroll taxes. My guess is that is for this year to get people back to work much faster. So hopefully that does happen. The confluence of this information is that the market, the stock market, is smelling a big cyclical recovery. We've talked about the value sectors really lagging behind the rest of the market, and the value sectors primarily energy, financial services, materials, and industrials. They had been lagging badly. And in the last week, 10 days, they have started to catch up pretty significantly. Now, and those four categories were the best performers just even month to date for June. Those are the four best categories: healthcare, consumer staples, consumer services, and tech are the weakest categories. And of course, they had been the strongest. Now, how do we feel about this? We are very much more focused on growth than anything else, future growth, and in fact, exponential growth. But we feel it's very important for cyclical sectors to start participating in the bull market, if for no other reason than cyclical reasons. And the reason for that is this means that the bull market is broadening out. It's becoming stronger. We had a similar experience in the fourth quarter of 2016. In the fourth quarter, right after the election, with the promises of tax cuts and so forth, the stock market took off against expectations. And the value space was the strongest part of the market for that quarter. The market was up, value was the strongest, was even stronger. And actually most of the growth sectors had a negative quarter. And I remember saying when we had to explain ourselves back then, that we actually thought this was a good thing from a bull market perspective. And we believed that it would be a launching pad at some point for the next leg of the outperformance of the kinds of stocks that ARK focuses on. And that turned out to be the case. 2017 was the strongest performance that I've had in my entire experience. And I've been in this market for more than 40 years. So I do think that we're in a little bit of a replay mode there. And then I'd like to just focus on some interesting developments in the innovation space. And this is very early stage, but just gives you a sense of how much is happening in the genomic revolution. Stanford University put out a study. It involved Cas13, not Cas9, which is what we're primarily involved with right now. This is very, very early in the research stage, but provides such hope. And it seems as though Cas19 is going to be able to disable viruses by scrambling the genetic code. And so here is a case of using CRISPR, a different flavor of CRISPR, not just for diagnostics, but actually for therapies, and not even for therapies after the fact, but prophylactic therapies to prevent any coronavirus. And I'm sure it goes beyond coronaviruses. So that was pretty exciting. And even earlier, perhaps, is another piece of news. CRISPR being used by Excision Biotherapies, and which is licensing IP from Temple University, basically announced that, again, very early stage, very early clinical studies, but they're experimenting, and they believe that they will be able to cure HIV. So right now, HIV is a chronic disease. Gilead has been the maestro in terms of bringing that disease under control. But it is possible that CRISPR therapies in the future could cure that disease. And that's true for CRISPR generally. We're looking at potential cures. We've seen, again, very early stage, we've seen cure beta thalassemia, sickle cell disease, HIV. I don't think this is out of primate studies yet, but if HIV is possible, we're onto a whole new chapter for CRISPR and gene therapy broadly. So today is an exciting day because the bull market has broadened out. I do think one reason is options expiration. So I think that turbocharged things a bit. So with the good economic news and a broadening bull market, I'm in a good mood, and certainly a much better mood than about a week ago in general. And I'm looking forward to the rebuilding of our economy and relationships, and we look forward to staying in touch with you. So thanks very much.